Wednesday, October 30th, 2019, Maneco 64, home of alternative economics and contrarian views. So the battle for the petrodollar continues. And what does that mean? Well, that means that the U.S. administration is trying to keep people around the world from selling or buying oil with other currencies other than the dollar. And I think what's happening in Syria is a big part of this. I'm going to talk about this a little later in the video. Before that, just update you on the Federal Reserve and their meeting that started yesterday and ends today. By the way, this is not the first FOMC meeting in October, and I've spoken about this before, maybe last week or so, that they actually had an emergency meeting on October 4th. They call it an unscheduled meeting. They've made it public on their website, and the reason I found out about it is because I was checking to see when the meeting later on in the month, the meeting ongoing right now, was going to be, and I found that, but didn't notice anything back then, beginning of October, from the media saying that the Fed had an emergency meeting. But don't call it emergency, of course, call it unscheduled. The Federal Reserve, by the way, today is expected to cut the Fed funds rate, the target for the Fed funds rate, from 2% to 1 3/4. That is priced in. So that's what the market is expecting. There is a press conference, of course, after the statement that comes out at 2 p.m. New York. The statement press conference starts. I think, I'm not sure, half an hour after that. I'm not sure exactly. There will not be a summary of economic projections today, according to the FOMC and the Fed states in the Fed webpage here. So that's what's going on. Before I go on to the petrodollar, just talk a little bit about the debt, give you a heads up. U.S. national debt quickly approaching 23 trillion. We're about 71 billion away from it. I'm not only bashing the U.S., of course. If you look at the world debt clock, which you can get from going to the usdebtclock.org website, you see that the UK national debt is fast approaching 100% of GDP ratio. UK external debt as well is 184%, which is huge. And just wanted to note one country which the West seems to bash a lot and blame for everything, right? As you know, Russia, right? Russians this and Russians that. Russians manipulated this and that. Elections, Brexit. Well, look at the public debt to GDP ratio for Russia, 18.4%. That's a very fiscally frugal situation. That's like what countries used to have 100 years ago or so, before World War I. That's Russia's public debt to GDP. Just wanted to point that out. The other thing about debt and the UK, we know now that we're going to have another general election on December 12th. It's just a sham what's happening here in this country. The people here voted to leave the EU. We were told that you either left with a deal or without a deal. That was Article 50. And that's what the 2017 election was run on. They promised the voters, yes, we're going to implement Article 50, which means we leave with a deal or without a deal. And even Theresa May, the former prime minister, said, I'd rather leave without a deal than a bad deal, right? And now they just keep delaying it. So this is just, just creates more uncertainty. But I think it's a big distraction, of course, from what I've been talking all along, that it's the debt, right? The fiscal situation. And yesterday, big news, right, about the election. Everyone just talking about that. And the the Office for Budget Responsibility, which was created after the financial crisis, they've come out and said budget cancellation triggers warning from UK fiscal watchdog, right? So it was a good day to publish that warning, right? When no one's looking at the at anything else but Brexit and the call for a new election on December 12th. And the UK fiscal situation isn't improving. I remember very well in 2010, and I'll repeat this, George Osborne, the then Chancellor of the Exchequer or Finance Minister or Treasury Secretary equivalent, said that the budget would be balanced by 2015. Here we are in 2019-20, and the budget deficit still running at 2%. This Office of Budget Responsibility is warning that the government is running, it says here, alongside the other ONS corrections in the public finance data, borrowing in 2021 would have been roughly 19 billion higher in that year than the OBR forecast in March, eliminating most of the Chancellor's 27 billion headroom against his own borrowing rule. So things are not getting better. There's talk now that they're going to keep running deficits as far as the eye can see. So that's why I say, as the currency nowadays is backed by debt, the more debt there is, the more debt they need to keep creating. Look at the Federal Reserve, more QE, cutting rates. The more debt there is in the system, the less value that will have, the less value the currency will have, the less value your money will have if you keep your money or your wealth in that currency. And that's why I keep reiterating that only precious metals and other tangible assets and cryptocurrencies to some extent will protect you from this inflation. This is inflation. It's not deflation, my friends. The excess creation of money or currency and credit is inflation. It leads to the debasement of that currency, especially when the economy slows down, right? So we need to keep that in mind. So now back to Syria and the petrodollar. We know the reason, or maybe some of you don't, and I've made many videos years ago about the petrodollar. Henry Kissinger was the architect of the petrodollar in the mid-70s, mainly because the US went off the gold standard, and confidence in the dollar outside the US was waning because people thought, we're going to be selling our tangible goods, oil and other things, and we're going to be getting a piece of paper. So they had to find a way to back the dollar by something that everyone needed, and that was oil. So they did a deal with the Saudis. Basically, the deal is Americans protect the Kingdom of Saudi Arabia, right? They help them out with their protection, become their like a policeman, and the Saudis promise to sell all their oil in dollars, not in Deutschmarks, not in Japanese yen. So, and Saudi Arabia back then, of course, was the biggest oil producer. It was the leader of OPEC, and that pushed all the other oil exporting countries to do the same, and that's the way it's been. But we know that in the last few years, with the US imposing a lot of sanctions on many countries that they don't like what they're doing, people have been trying to find alternatives to the petrodollar or using the dollar. Why should China and Russia, for example, deal in dollars if they're dealing bilaterally, right? So people are doing bilateral deals. We've had the Shanghai Oil Exchange started last March, where you can trade oil in Chinese yuan. You've had Turkey and other countries dealing settling trade with even gold or their own currencies. So the fact that there's a story here on Zero Hedge, it says retired general, Trump's Syria oil plant turns U.S. troops into pirates. Story says, after President Trump suggests on Sunday that he would like to make a deal with ExxonMobil or one of our great companies to go into occupied Syria and take the oil, one of the few former top defense officials to explicitly condemn the plan, which clearly smacks of naked U.S. imperialism, was retired General Barry McCaffrey. Referencing Trump's comments, an outraged McCaffrey posed a question on Twitter. What are we becoming? Pirates. You've been pirates already, Mr. McCaffrey. This is not new. It's just becoming even more in your face, I would say. He further stressed the oil belongs to Syria and ultimately we lack congressional authority to stay in the country at all. You see, Syria probably would want to sell this oil to the Russians, maybe in rubles, to other countries in their own currency, to the Chinese in yuan, to the Indians maybe in rupee or gold, and now the U.S. It's not that they want the oil, in my opinion. It's that they want to control how that oil is sold. They might even let the Syrians keep the revenues from the oil, but it's how they sell it, right? The currency they use. And I'm sorry to burst your bubble, Mr. McCaffrey or General McCaffrey. This is not the first time America has done this. It's done it in Iraq when Saddam Hussein decided to sell his oil in euros, right? Look what happened to him. It's happened in Libya when Gaddafi decided to not sell his oil in dollars and start even a gold-backed dinar. Look what happened to him, right? And look what's been happening to China in terms of the trade dispute ever since they started this exchange in Shanghai to trade oil for yuan, right? So anyway, why is the petrodollar important? Well, because it allows the U.S. to keep borrowing and printing money because there will always be a demand for dollars as long as there is the petrodollar out there. All the countries in the world that need oil, and that's 100% of them, will need to have dollars. They need to have dollars to buy the oil, right? So what does that do? That means they have to buy the dollars, right? It creates demand. And that's been America's greatest export in the last 50 years of debt, right? So that's what it's all about. What's going to happen? I don't know. I think the trend is towards less and less demand for the petrodollar, which means higher prices for Americans. That means that the petrodollar will keep going down in value. And the petrodollar basically is the Federal Reserve note, right? We all know that the technical true definition of the dollar is 371 and a quarter grains of fine silver. There's also the conversion to gold into the eagle, right? The $10 gold eagle. I'm not sure exactly how much that is, but that's what the dollar is. We talk about petrodollar, but it's not. It's the Federal Reserve note petro, right, that we have. So there you go. Now to the markets. It's 8:01 a.m. London. Of course, right now we're only 4 hours ahead of Eastern time in the U.S. Your clocks, I think, fall back this weekend. Ours did this past weekend. So 8:01, we've got spot gold up $1, 1488.70. Range has been 1487 to 1490. Silver down a cent, 1779. Range has been 1774 to 1788. So markets are very quiet, and they were quiet yesterday, mostly awaiting to see what happens after the FOMC decision and the press conference and the statement and all that, right? The Dow is down 8 points. S&P is unchanged. NASDAQ as well. I won't even go through the levels here. Currencies as well, except for the pound. Everything is pretty steady. The pound is up 1/3% at 129.03. Yeah, what about the pound? Well, I think just like every other fiat currency, it has only one way to go, down. Down versus what? The dollar? No. Down versus real money, gold and silver. Down versus tangible goods, goods that are difficult to create, right? And why do I say that? Well, because they're going to have to keep creating more and more debt because we're in a debt bubble. Unless they really, how can I say, free up the economy by cutting the size of government and letting the private sector grow, which would help pay off the debt. Unless they do that, I don't see any hope for paying off this debt. So I continue to be a long-term seller of fiat currency because of that. Crude oil this morning, virtually unchanged here. WTI is at 55.35. Brent is 61.09. That's the other thing about the petrodollar. The powers that be who run the petrodollar, they want to see that price remain fairly steady, because if we have oil at $20, that means the people who deal in oil will have less dollar revenues. Countries that need to buy oil will need less dollars, right? So there you go. Not as much demand for dollars. What else? Bond markets to finish off. 10-year yield 184, pretty much where we were yesterday. 2-year at 165. So let's see what the Fed does and how the markets react to that. Yeah, don't call it a policy cut, please. Call it an insurance cut, right? That's the other thing that Jay Powell has been saying, even though he's cut rates now, is going to be the third time this year. Oh, no, this is not monetary policy. This is just an emergency cut, right? Just like the QE he's doing is not QE. So if you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you hit that little notification bell above to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.